Good afternoon. Today we're going to talk about mutual funds and ETFs. Many of you have probably heard of mutual funds and ETFs before, but maybe have not understood the differences between them. Mutual funds and ETFs are a vehicle used by investors to gain the benefit of diversification rather than investing in 1, 2, 3, or 4 different stocks and taking on that individual company risk. The differences between mutual funds and ETFs are defined by 3 main things, and that is ETFs have greater transparency, they are more cost effective, and they trade over an exchange, much like a stock. So we'll go through the first one first, greater transparency. Mutual funds, when you're invested in a mutual fund, you may not know everything that is in it at any given point in time. So, for example, a mutual fund could be a basket of stocks if that's what the objective of the manager is. But you don't know exactly what all those stocks are at any given point in time because they are only expected to report them quarterly. So every quarter, you'll get the list as of that day of the specific stocks in that mutual fund. With ETFs, you can go to the website daily and see every security that is in that ETF, hence greater transparency. Number 2, cost effectiveness. Mutual funds, because they are managed by an active group of investment professionals, they're paid a fee for doing that business. And that fee is passed on to the mutual fund investor. And so an objective of large cap growth, for example, in a mutual fund could be something like 25 basis points or 30 basis points, 0.25%, 0.30%. In an ETF, in a comparable investment objective, could be something like 4 basis points or 5 basis points. Now, this may seem like an insignificant amount, but when you're managing a lot of money, it could be very significant in the cost savings. Moving on to number 3, ETFs trade over an exchange versus mutual funds that do not. Mutual funds, when you trade a mutual fund during the day, you get the end of the day's price. So if in the morning the market is up and you sell a mutual fund that is invested in stocks, and then the market falls from noon until 4 and then closes, you may receive less than what you had intended. Versus an ETF, it trades over an exchange, much like a stock does. So whenever you sell that ETF, you're going to get that specific price that you sold it at. Hopefully you have a little bit better of an understanding now between the differences in ETFs and mutual funds. If you have any questions, please reach out to our team at Flaharty Asset Management, and if not, we'll see you in the next Timely Topics.